With home prices potentially dropping for the first time in years, the U.S. real estate market is facing a critical turning point, driven by many factors, including shifting buyer behavior, economic uncertainty, and broader financial policy impacts. Join us now to break it all down is Mike Miedler. He's the CEO of Century21 Real Estate. Mike, always grateful, really grateful for your time, I should say. How have home prices in the U.S. real estate market changed as of late? And I wonder, what are the projections for the market for the rest of 2025?
JD, you mentioned it. There's definitely some shifting going on in the market. I'll mention a couple trends that I think are going to define the summer season. The first is inventory, right? Inventory has been compounding. It's up 33% year over year, and that's not just the Sun Belt states like it was, call it a couple months ago. You're now even seeing an increase in states like Connecticut in the Northeast. I think almost every state has an increase in inventory. And so while that's good for buyer selection, to your point, it's putting a little bit more pressure on price. So, I mean, I think we're seeing across the country where prices are anywhere from flat to down. I'll tell you right now, there's 9 states across the country where prices are either flat or down, but you're not going to see that in small inventory states like New Jersey, where I'm at, or New York or Connecticut in the Northeast. It's driven mainly by a lot of the Sun Belt states, the Texases, the Floridas, the Georgias, where, you know, you saw a lot of folks go there over migration patterns post-COVID, and then a lot of building got done. And so you're going to see some price breaks and price cuts in that market. I wouldn't doubt if we wind up the year with price either at or below where we were in 2024. And then the last big trend I think we're all following is the units perspective, right? From a units perspective, we've had couple years of consolidation. We're now starting to see, even though we're behind about 3% on units so far, in the end of May, we are 8% over the previous week in 2024. And I think following May and June, you might see units start creeping up. And who knows, maybe we'll have the reverse story that we've had over the last couple years, which is price up, units down. It could be the reverse this year. We'll see.
Mike, do we have any breaks in those other markets you mentioned, the New Jerseys and New Yorks of the world, and how would you diagnose how things are in some of those?
Yeah, I mean, I think to your point, in some of these higher tax states where there are obviously a lot of jobs and density, if you will, some of these older suburbs that they're not allowed or can't build as much as you could in some of the previously mentioned states that I talked about. I think it's going to be interesting because inventory is still going to be a challenge. You know, there's a lot of different things that are before the government. I know the government's trying to help out in different ways and getting new inventory, but it really is a local based problem and issue that we'll have to have in order for those prices really to come down in the New York, the New Jerseys, the Northeast states of the world.
Yeah, I wonder what you're seeing in terms of trends for things like mortgage rates and how that impacts.
We are obviously one of the most price sensitive, right, to rates in general, and you know I think we've seen now a couple of months in a row of prices staying right at about that 7% or just below mark. I think that consistency is good for the market. I think honestly, JD, if we get a mortgage rate break or reduction, you're going to see a lot of pent-up demand flood into the market. You've got first-time home buyers at the lowest rates that we've seen in years. From an age perspective, it's about the oldest we've ever seen the first-time home buyer be. And so I think you're going to really see a lot of folks come into the market if there is a mortgage rate deduction here in the next couple months.
Mike, what are the biggest economic or policy factors that you're looking for that could influence the state of the U.S. real estate market? I'm sure you're watching the Fed very closely, which means maybe in another layer you're watching inflation prints very closely. We watch what happens with these stubborn yields on these long-term treasuries. It's seemingly a never-ending mix of panels. You don't want to go too hot or too cold on any one because
yeah, and look, I mean, I think as you mentioned, there's a lot of different things that the government could do. You know, you could put pressure on the Fed to lower interest rates, but anything, honestly, that's going to just cause more demand is not necessarily going to get us out of where we are from a real estate perspective. JD, this is so based on a local level in that, you know, depending on who you talk to, Freddie, Fannie, we're something like 3 to 4 or 5 million homes short in this country for the amount of U.S. home population that's risen over the bunch of decades here with underbuilt marketplaces. And we're really going to need to see something happen at the local level where, you know, people are inspiring builders and developers to come into their market and put more homes in the ground.
What would you say is causing?
What would you say is causing the biggest disconnect currently between buyer demand and seller expectation? Is it that we're still in this relatively high
I think
interest
part
rate
of it
environment?
is, I think, right now you're seeing 37% of the homes that are on the market are taking a price cut. And so I think there is this shift in the market that we talked a little bit about earlier with, 10 plus years of run up in sale price, that sellers are going to have to get a little bit more realistic as they come to the market and where their particular market is. Now, here's the thing is that, as I mentioned, Northeast could be completely different than the Sun Belt, so you got to have a great professional behind you to recognize what's happening in the local zip code that you're looking at, because as you know, all real estate is hyper local.
Yeah, when we talk inflation prints, obviously we follow what happens with consumers, but as you know, Mike, we also very closely follow what's going on for wholesale or producer inflation. And I wonder where you're positioned. How do you expect the tariff and trade policy related uncertainty to impact the costs for a lot of the producer side, for home builders, new construction
Yeah, I mean, I think
projects,
anytime there's a
things like
little
that?
economic uncertainty, it's not good for the consumer at large, right? And so from a tariff perspective, I don't know where things wash out. Obviously, if we're going to be taxing lumber and, other things that are coming into this country to get homes in the ground, that's not going to be a great thing. At the same time, lumber prices right now are like at or below what they were back in, call it 2020 and 2022. And so, I think really more of the problem is not necessarily on the tariffs per se and that part of the inflation. It's about, honestly getting good inventory for the amount of demand that we have in specific marketplaces into the ground. And that's a long process, JD. As you know, it's not just lumber, it's also the labor that you need and, so many other things on the regulation front that have to be overcome at that local level.
Yeah, and so then you include the conversation of wages or wage strength relative to take-home pay. I mean, to our point earlier about so many factors that can't run too hot or too cold because there's other downstream repercussions. From where you're situated, what do you think first-time home buyers should most keep in mind when approaching this market, given that there are so many mixed signals on everything?
Yeah, I
from
mean,
inventory
as a
to
real
pricing?
estate guy, I say to get involved. I mean, we know that obviously home owners are 40 times more wealth that they have in the bank versus renters. And so, you can't watch the mortgage rate. The mortgage rates are going to shift. It gives you an opportunity to maybe refi. There's the old saying, you date the rate and you marry the house. And so, look, first-time home buyers are getting creative. I mean, I think I read a statistic from NAR that there's it's a $49,000 more need in your income in order to afford the home today than it was, call it, 5 or 6 years ago. And so that's a considerable amount of money. To your point, I think what you have to do is get creative. We're seeing a lot of first-time home buyers come into the market with, honestly, some type of loan from mom and dad. One of the things that I want to dispel right now is you don't need 20% down. The average down for the first-time home buyer is about 9%, so there's creative ways around that as well. We're seeing more multi-generational households than we've ever seen, and I love this stat as a father of 4 daughters. Single females are the highest percentage that they've ever been, 24% of first-time home buyers. I think it's double what men are. So people are getting creative. They want that dream of home ownership. To me, it's a great investment for the lifetime, and I think working with a great professional will hopefully get you on that path to home ownership.
Mike Miedler, CEO of Century21 Real Estate, really grateful for the time and the much needed perspective about a really important industry at a very important
Thanks, JD.
time. Mike, thanks for everything.